Two. Hey, can y'all hear me? Just go ahead and chat and say if you can hear me. Yes, no. Can you hear me? Hello? All right, awesome. Thank you for saying that. Cool, cool. All right. So let me get ready here for y'all. Okay, so hey everyone. My name's Nathan. I run this little website, EZAccountingReviews.com. So a little bit about me real quick. I've been a tutor for like 7 years doing this accounting stuff. I went to school, Texas State. I took like 9 accounting classes. So I know it's up here. I've taken a lot of tests. I know a lot of the professors there still. So I'm just going to go through some topics here, and I'm going to show you how to take tests. That's the idea. So I'm going to show you some quick lessons. I'm going to pair that with some test questions, show you how to get to the answer real fast so you can do well on your tests. That's really what matters. So the first topic we're going to talk about here is break-even point in units. And make sure you guys stay for the whole time because at the very end I have a free offer for y'all that you'll really like. So first off though, break-even point in units. This is one of your topics on your tests. Here's kind of how it works. The first thing you really need to know is what question is it answering. So what it's really answering is this, is that every business owner wants to know how many units must they sell to make $0 in profit. That's what they want to know, because as soon as they figure that out, they have $0, then anything else they sell is profit, and that's a good thing. So they want to figure out what's the minimum that we need to sell before we start making money. That's essentially it. And so this little statement over here, sales minus variable costs equals contribution margin minus fixed costs equals operating income. Y'all have to know this. It's very important to know. And a really important part of this for break even is that these two numbers here have to equal each other. Contribution margin and fixed costs. If they equal each other, then that's break even. You make $0. That's a very important point there. Now, we're going to use this here in a test question, all right? So take a look. And before I do that, let's talk about the formula. Okay, so with break-even point in units, you have to know the formula. There's a lot of formulas in accounting, which sucks, but you have to know them. So let me show you an easy way to remember it. First off, the formula is fixed costs divided by your contribution margin per unit. All right? That's a formula you have to know. So hopefully you're taking notes right now, because definitely you have to know it. Now there's 2 parts to this formula though, and I want you to start with step 1, which is pretty much figuring out your contribution margin per unit. That's the denominator, which is going to be your sales minus your variable costs. Okay, so those 2 things there, you just have to subtract them, and that's your contribution margin per unit. Now once you get that, all you have to do is plug in that CM per unit into this above formula right up here. After you get that, you just put your fixed costs as the numerator. That's it. They give you fixed costs every single time in test questions. I haven't seen one where they didn't give it to you. So you got to plug that in, all right? Plug in your contribution margin per unit into the denominator, your fixed costs into the numerator, and that's break-even point in units. Very important. So let's take a look at a question here. We're going to start with what we call a conceptual question. Before we do that though, make sure you get your calculator out You're going to solve these questions with me. It helps to write them down or to type them in, whatever's easier, and take some good notes. So the first question here they're going to ask is, at the break-even point, what happens? And notice there's like 5 answer choices here. That's a lot. You'll see that on a test. Sometimes they give you 5, sometimes they give you 4. And the idea is to get to the answers really quickly, right? And so we just talked about this. We knew that contribution margin has to equal your fixed costs, right? And therefore, it's at the break-even point. So we know that A is wrong because that's not what it says. B2, it says total sales equals total fixed costs. That's wrong. C looks good though. Total contribution margin equals total fixed costs. Now also be careful with these words here, okay? Total, because in this class, at the very end, total and per unit is really important. Really important to know the difference between the two. There's a per unit number and a total number. Total is pretty much this. It's just taking your per unit amount, whatever that cost is, and multiplying it by number of units. Okay, so that equals total cost. Now another important point here about this word right here, per. So some of you might know this, and that's okay if you do, but some don't, and I want to show you what that means. Whenever you think of per, I want you to think divide. Anytime you see the word per, it's going to be this cost per unit, or this cost whatever. You just divide your total by the number of units to get your per unit amount. Per always means divide. So that's the first question here. It's what I call a conceptual question. There's no numbers, but unfortunately in accounting there is a lot of numbers, and you have to know how to solve these problems. So take a look here. Here's the break-even point question with numbers, all right? So what I want you to do first with any type of computational problem, every single time, you need to look at what the question's asking for first, okay? That's very important. Because if you don't do that, you're not going to know what to look for in all this junk up here. All these numbers and everything, which is pretty overwhelming on tests. But if you start right here, what the question's asking for, and that's usually right above the answer choices, you can work backwards and figure out what they want. Okay, again, learning accounting is important, but if you're in school, getting good grades on tests, that's most important. I get that. And so that's what I do. I help you get good grades. So the second step is to go through the problem and figure out some of these keywords. So I see one here. This company, he's going to sell a product, and he sells it for this much. And so what I want you to do on your test is I want you to underline the keyword, whatever that might be. It could be an account name. It could be a verb. And then I want you to circle the related number every time. Because that way, when you're trying to calculate stuff and you're panicking, which I hope you're not, but if you are, you can look back up quickly and look for what's important, what you circled and what you underlined. Okay? So the next keyword is direct materials, which is $12. Per unit, that's important. Labor and overhead both are combined for $17, and then fixed costs in total, $84.20. Total fixed costs. So that's actually the third step. The second step, really, once you read the question, what they're asking for, write down the formula immediately. Fixed costs, and we're going to divide that by your CM per unit. Okay? Write that down, and now we can just work it out with step 1 and step 2. So remember step 1, right? Get your contribution margin per unit, okay? How do we do that? You just take your sales and you minus your variable costs, or VC, and that's your CM per unit. Sales, well, we underlined it, right? Easy, $42. Now your VC, right, variable costs, that's a combination of stuff, okay? So I know that materials is definitely variable. Labor and overhead are definitely variable. This one was a little easier because they only gave you variable costs and that's it. Sometimes they give you other junk that you don't need. And it's important to know the rules and the formulas so you can get rid of that stuff, whatever you don't need, okay? So we know variable costs. It's all you're doing is going to take this $12 and this $17 and combine them. And we know that 12 plus 17, go ahead and calculate that. That's going to be $29. Okay? So you just plug it in. Now we got our contribution margin per unit. Subtract those out. And this is a negative number. $13 per unit. And now what do we do with that 13? Just plug it in. Right there. Boom. That's where it goes now. So I'm going to have to squeeze some stuff in here. Sorry. I'm going to plug in total fixed cost, which is $84.20 right here. Down here is your contribution margin per unit. Divide those two numbers, okay? And that's what you get. So $84.20 divided by 13. There you go. So number of units to break even, we got 648 rounded up. There you go. That's your answer. And again, that's the number of units that you need to make $0 in profit. That's it. So take a look here real quick. If you need me to, I can slow down a bit. And that's how you solve it. So here's a quick slide for you on tips to solve, what I went through. Know your formula, solve for contribution margin first, then plug it into the denominator and calculate. That's it. So I love these like little note card slides because it gets to the point real fast. A lot of times you just want to know, what do I need to get to the answer, right? We all want to know that. I imagine a lot of you aren't going to become accountants, and that's cool. It's not a big deal. So you just want to get past these tests. And that's what I help you with. So these tips to solve things are these note card videos I create. Very important. Write down these notes, okay? So we're going to move on here. Let's go to the next topic, which is relevant or irrelevant. So this is under that decision-making chapter, which also sucks, but it's actually really applicable to daily life. And I'll show you what I mean. But you got to figure out if things are relevant or irrelevant and apply it. So take a look here. In this chapter, it all revolves around decisions, right? We all make decisions in our daily life. Managers have to make decisions too within a business. And so when you make that decision as a manager, the result always that you want to achieve is more profit. Okay? That's always the goal, right? It's capitalism. Like, we want to make more money. Businesses want to make more money. So the result always must end up in more profit. If you do one of these problems and it ends up in a loss and you don't make any money, then that's probably not a good decision. And here are your choices that you see in your class. You got make or buy, accept or reject, keep or drop. So we're going to focus on this one today, make or buy, and that's essentially just making the product, or you can buy it from someone else, from like a third-party supplier. And so you have to figure out, as a manager, all right, so I should make this product in-house. How much do I make if I do that in profit? Or should I buy it? What's most cost-effective? What yields the lowest costs, right? Because the lower your costs, the more profit you make. It's that simple. So another thing here you probably have seen is accept or reject, and they also call this special order problems. Sorry if my handwriting sucks. I work on it sometimes, but it's not that good. But so like with a special order problem, all what's happening is this, is that a manufacturing company is super desperate and they're not selling enough. And if they're not selling enough, they're not producing enough. And that big factory space, they're still spending money on it every month or every year. And so it's more advantageous for a company to make as much product as they can so they can fill up that factory space. But the issue here is that they're not. And so a buyer will come to them and say, hey, I know that you suck at selling things. So I'm going to place a huge order for you, but I want you to give me a big discounted price for that. And so as the manufacturing company, you got to figure out, should I take this guy's order or should I not? And it's that simple. And you got to figure out, will I make profit or will I lose money? That's it. Keep or drop. All this has to do with here is keeping unprofitable division or dropping it and seeing how it affects the entire company. But for this review, I'm just going to focus on make or buy, okay? So before I do that, though, we got to focus on two things here, okay? And so you got to ask yourself these questions every time you see a problem like this, okay? What is different between the two choices? That's the key word. What is the same? So basically if a cost is different between the two choices, make or buy, keep or drop, accept or reject, if there's a cost that's involved for one but not the other, we call that relevant. It's different between the two choices. It's relevant at hand. There's another word for this. They also call it avoidable. That's also relevant. And you want to be looking for those, okay? Those are very important to the problem. You're going to use them. And I'll show you what I mean in a bit. Now, what is the same? All right, same. In accounting, same is not really good. It's not relevant to the problem. If it's the same between the two alternatives, the same costs or the same revenue, we call that irrelevant. All right, and here's a little trick I want to show you. If you identify something as irrelevant and you don't know what to do with it, the I in irrelevant, think of the I and ignore. Okay? So as soon as it's irrelevant, you're like, I don't need that. Well, clearly you should ignore it. Don't use it in the problem. Cross it out. Cross it out, cross it out, cross it out. It's very important to cross it out because if you don't, you're going to start calculating and like getting all crazy, and you'll look back up and you'll see a number and you'll grab it and it might be the wrong number. If you just cross it out, then you won't be looking at it. That's the point. So that's very important. Relevant, avoidable, irrelevant, ignore. Another term for irrelevant I've seen is called a sunk cost. Sunk cost, all that means is that that's a cost that you made a long time ago. And no matter what choice you make right now, it doesn't matter. It's already happened in the past. So that's another word for irrelevant, and you should ignore it. They also call it like past costs as well. So let's do a problem, all right? So first off, once again, get your calculator out if you don't have it. Work them out with me and take some good notes, okay? So, all right, man, this is actually kind of a bigger problem. So we're going to break this down, okay, and make it super easy. But this is something that you will see on your test. I guarantee it. First step, what's the question asking every time, all right? So that's right above the answer choices. So the question's asking, what's the effect on income if Jackson W. purchases the cell phones from a third-party supplier? Okay? So what they're really saying is that what happens to his profit? And he's already making the choice. He's going to buy it. And that's what purchases mean if you don't know that. It means buy. He's going to make that choice ahead of time. He's going to buy it from a third-party dude. And so again, his choices, right? What are they? It's either to make it or to buy it. Now we know he's going to buy it, but we have to figure out the comparison between the two to figure out how it affects his income. Okay? So here you're going to set up a little chart, a little table. Make over here, buy over here, and put a little line down the middle. And over here you're going to have your relevant costs, okay? And that'll be here. And I'll put another line, a really straight line. So anyway, now we know what they're asking for. We need to go and start looking at the data and see what we need. So first off, this incorporation, they manufactured this many cell phones a year. 35,000. That's a lot, right? And so here are his manufacturing costs. They tell it to you. You got your direct materials, direct labor, overhead, and fixed overhead. Now, something I didn't tell you on the last slide. Anytime you see fixed costs in this type of problem, right? If it's a make or buy, accept or reject, keep or drop, for the most part, There's a few exceptions, but for the most part, the majority of the time, fixed costs is irrelevant. You don't need it. So anytime you see fixed, most of the time it's going to be irrelevant. That's because no matter what choice you make, that fixed cost still has to be incurred every year. You still got to make it either way. If you decide to make it, you still have to pay that guy's salary, which is a fixed cost. If you decide to buy the product, you still have to pay that dude his fixed salary. So it's the same between the two alternatives. So if it's the same, you don't use it. You completely ignore it. Now materials, let's think about that. Is that the same or is that different between the two alternatives, make or buy? Well, if you make it, you have to spend money on materials. But if you buy it, you don't have to spend money on materials. You make it, you do. You buy it, you don't. I call that different. Therefore, it's relevant. So we would put that right under make. I'll put 125K, and that's going to be DM. I do a lot of shorthand. I recommend that as well. It makes things go faster. So DM is 125K. Labor, same thing. If you make it, you got to pay these dudes to make the product. If you buy it, you don't have to pay them, and they're out of the job. Sucks, but it's how it is. So direct labor is also relevant. So we put a DL here and put 275K. Now overhead, that's going to be relevant, okay? So overhead, it depends on what it is. If you see variable overhead, which I'll put right here, that's usually what it is, variable. If variable overhead, most variable costs are relevant. So you can also write that down too. Most variable costs are relevant, most fixed costs are irrelevant. So if it's relevant, we got to use it. And I'll put VOH for relevant, variable overhead. And that's 185K. All right, so let's put a line here. Now, what if you buy it? It says this outside supplier here sells cell phones for $30.50 each. So what if you buy it? Well, if you buy it, you don't have to make it. So this buy cost right here, or purchased, doesn't go under make. It only goes under buy. And you put $30.50 for the buy times the number of units, which was 35,000. It's 35K. And there you go. It's that easy. You set up a table, you figure out what's relevant, what's irrelevant, fill in the columns. So, let's add some stuff up. We're going to start with make. I want you to add this up with me, okay? So 125,000 plus 275,000 plus 185,000. So to make it, it's going to cost you a total of 585K. Now, if you buy it, let's multiply these two numbers out here, okay? So $30.50 times 35,000. There you go. And what is that? That's over $1 million. 1067500. That's a zero. Cool. That's also a zero right there. All right, so now what you do, they want to know what's the effect on income. Well, you're probably like, oh, you know, it's $1,067,500 if he buys it. That's stupid. I agree. But that's not the effect on income. The effect on income is comparing the two numbers and getting the difference. These two numbers here. That number and that number right there. That's what you got to compare, okay? Those two numbers. Compare the difference between if you make it or you buy it. Or compare the difference if you accept it or reject it. That stuff. You got to compare the numbers, and what you got to do is just subtract. That's it. So subtract those two numbers with me. 585,000, 1,067,500. There you go. The difference is 482,500. Okay? And boom. We can erase A. Get that out of here. We can erase C, right? Because that's the wrong number, okay? So What now though? 482,500, we have two choices. At least you're down to 50%, right? Because if you guess wrong, that sucks, but you have a better chance of getting it right. And that's all test taking is. Test taking is not, let me get the answer right away. It's not about that. It's about increasing your chances of getting the right answer. That's what testing's about. So, is it a decrease or an increase in income? Well, if he buys it from this dude, this third-party guy, he's going to spend $1,067,500. That sucks. When he could make it for $585. That would be a really dumb choice. So he's going to buy it though and make the wrong choice. So his income is going down. It's a decrease. Hopefully that makes sense. It's pretty logical if you think about it like that from the perspective of a business. Every time you take a test or you're in accounting, put yourself in the shoes of a business owner. What would he do? He wants to make the most money. And sometimes he makes the bad decision and pays more than what he needs to. And so you got to look at the numbers and see how it affects him. That's a good problem. You'll definitely see something like that, something very similar to that. So moving on here, tips to solve. What are the two choices, right? Make or buy, accept or reject, keep or drop. Figure out the two choices. What's different? That's relevant. What's the same? That's irrelevant. If you compare those two, you can start eliminating the same stuff that's irrelevant, and you're down to what's relevant. And the problem becomes a lot easier after that. All right, so let's move on here. Hopefully this is helpful so far. All right, next topic, budgets. A lot of y'all, when you responded to my survey, you said, I hate budgets. I hate them. Now, I want to remind you, though, of something, okay? Is that your test is not an Excel spreadsheet. Your project you did, hopefully you did well on it, that's not your test. Your test is multiple choice, okay? And that's not the same stuff as Excel. Excel, you're like moving numbers around, plugging stuff in. That's not a test. A test is multiple choice, and all of that budget stuff you hate is going to be translated into multiple choice formatting, okay? And that's what we got to get good at. We got to get good at taking tests and quizzes. So let's see here. The first thing I want to talk about is when you look at a cash disbursement budget, okay, you're looking at that budget, right? That's what they're paying out. And so that's the question you got to ask is, how much did they buy? What are the purchases? I want you to focus on that, okay? What are the purchases? So there's going to be multiple months, right? They're going to have a lot of purchases, and the key really is to figure out what month do they pay and how much of it. It's all about pay, right? Which means cash outflow, meaning cash going out. Sometimes you buy stuff, but you don't pay for it right away. I mean, that's what debt is, right? And so, but in cash disbursements means to pay out. Okay, that's what you're doing. You're paying out in cash. And so we got to figure this out here. These are some good, important points that you have to know. Now let's move forward here. All right, and so I want to do a quick prep again before we tackle a multiple choice problem. And you'll see what this looks like. It's not an Excel spreadsheet. So first, get your calculator out if you haven't. You're going to solve those questions with me. Hopefully you downloaded those, and please take good notes. It'll help later when you're studying on your own. All right, so this is a big one, okay? And so once again, I want to start you out with what's the question asking, right? Because there's a lot of junk up here that you may hate, which is okay, but we need to figure out what's the question asking so we can attack this problem in a strategic way. What are Cheese and Crackers Company's total expected cash disbursements for the month of July? That's important, okay? We're going to be focusing on just July here, and that's it, all right? Just July. And they want to know cash disbursement, so we know payout. What's the payout? Okay? Now, let's take a look now at some of these numbers and keywords, okay? So this company, they purchased $85,000 of goods in June, okay? And they expect to purchase $70,000 of goods in July. All right? Now, those are the two important months, right? Because July is when you have to figure out how much do you pay in that month. But look at this next sentence. In August, this dude will purchase $56,000. If you're just looking for how much you pay out in July, does August matter? The answer is no, it doesn't. And so what I want you to do, if it doesn't matter, cross it out immediately. Get rid of it. You don't need it. Don't even look at it. Okay? Now the next thing we got to ask after the purchases is in what month do they pay it and how much do they pay it? So it says they pay for 35% here in the month of, and they pay for 65% in the following month. Okay? Those are two important rules. You know that whatever you bought in the month of, the current month, you're going to pay 35% of that then. The next month, you'll pay 65% of it. That's how it works. So I'm going to do a little table for y'all, and this will help a lot. I love tables. It's super easy. Just fill it out real quick, and then you're done. So what's this table look like? Well, hopefully I can have some room here, so let me set it up. So up here, this is going to be your payout, how much you pay for June and for July. Now down here, this is going to be your purchases, okay, and also for June and July. So the question is how much of your purchases in June right here will be paid out in June? That's the question. And we know that. It's 35%. You purchased $85,000 in June. That's how much you purchased. So we know that 35% of that will be paid out in June. Let's do it. Let's do 35% times 85,000. And you get a number. And that number is weird. It's 29,750. Okay. Now that's what you pay out in June. So for July's purchases, do you pay anything out in June? That doesn't make any sense, right? You purchased it in July. Why would you pay it out in the month prior? That doesn't even make sense. If you can travel in time, maybe. But that doesn't make sense here. So get that out. Now July, though, the question is how much of June purchases do you pay out in July? Right? How much of June do you pay out in July? Well, we know that. We know that if you bought 85 grand of goods in June, you pay out 65% of it in the following month. What month follows June? July. So look for keywords like that, okay? Following, that's important. So we know right now we're going to do 65% of June purchases, which is 65% times 85,000. All right, so 55,250 of June purchases will be paid in July. The next question you got to ask is how much of July purchases, this 70 grand right here, will be paid out in July? Well, July is July, so that is the month of, and we know that rule. It's 35%. Anything that's in the month of is 35% worth. So you just take 35% of July. So take 35% and multiply it here by that 70K. Sorry, I don't have a lot of room here. I'll write it for you. 35% times 70K. And that's what you pay out in July of July's purchases. There you go. 24,500. Now that is what you pay in July. That's what they're asking for, right? Cash disbursements. These two here. Add them up. Add them up with me, okay? So 55,250 plus 24,500. Boom. 79,750. There you go. It's that easy. It's that easy. If you set up the table, you're good. Okay? If you set up the table, you are good. You will see something like this on your test. Another type of problem that's similar, with you should use a similar table, is the cash collections, right? You have cash disbursements, which is this. And then you have cash collections, which is the opposite, right? That's when you actually collect cash. Cool. Cool. So that's a pretty big problem there as well. Hopefully you took some good notes. I'll leave it there for a sec so you can kind of see how it looks there. But notice if you kind of follow these steps, right, getting to the answer, it's just a lot easier. And that's the point, right? It's got to be easy. All right, so tips to solve on this one. How much were your purchases? Underline and circle, right? Underline the important terms. Circle the numbers for every problem, not just that one. Identify your monthly percentages. What are they? How much do you pay in the current month? How much will you pay out in the next month? How much do you pay out in the month following that second month? You got to pay attention to that stuff. And then use my tables. Okay? So I created another review, a premium review. This one is over now, but if you liked this, a lot of topics, right? You go through quick lessons, and then I show you how to answer test questions. Stuff that's so similar to what you'll see on your exam. I mean, it's not identical, but it's very similar. I study test questions. That's what I do. And I know what kind of questions teachers ask. So I want to give this y'all, I want to give this away for free to y'all, okay? You get free access to it, okay? It's a huge review. It's got like 3 hours of videos that I create. You can watch them on your own time. I pair lessons with test questions. The lessons are similar to this, but it's more of like graphics and animations, so you can actually understand how this works. And then immediately I pair it with test questions on that topic. So you just watch it a little bit at a time, practice the questions with me, and you'll see your grades improve. I guarantee it. I'm talking like on average of 30%. And that's what we want, right? We want better grades. So all you have to do for me is this, all right? Just follow me on Instagram. Here's my handle. And I want you to like and repost my latest meme. I posted one earlier. So just like it, repost it, share it for me, okay? Let everyone know about this stuff. Accounting sucks. I know it does. I've been doing it a long time. But I don't want to make it suck for y'all. I want to make it easy for y'all. And that's my goal. I know that professors aren't always the best teachers. So let me help y'all out, all right? I'm going to give you free access to this one, okay? So all you have to do is that for me, all right? Just follow me there on Instagram. Like and repost it for me. Tell your friends. And that's it. And if you want to like my Facebook page as well, that'd be awesome. Okay? So hopefully that's helpful for y'all. I know that's kind of a long review, but I see, yeah, some of you guys are still watching, which I appreciate. And yeah, email me if you have questions. I also do tutoring. I do charge for that though. So if you guys want to do like group sessions, it's a lot cheaper than one-on-one. But either way, hit me up, email me, okay? And then I'll just give you my number as well. Don't blast my phone though, but if you want tutoring, just hit me up. I know your test is tomorrow. I have some time tonight. Okay? We can do tutoring. I do everything online. It's just like this, but instead it's a Google Hangout session. You can see me. I can see you. You can share your homework, share whatever with me. I share a whiteboard similar to this. And you get better grades, okay? So thanks for watching. Hopefully this was helpful, and maybe I'll see y'all again. All right, bye-bye.